Good morning, guys. Good morning. Good morning. Good morning. I'm so glad to see you. Do me a favor, put your questions in the Q&A section if you have any questions for me that you'd like for me to answer today. Also, what I'm going to do is I'm going to go to your private blog, and I'm going to answer those questions first. I know some of you left questions that you'd like for me to answer about the stock market. The stock market, it appears today it's doing pretty well. Let me see here. Let me see what the Dow is doing. The Dow, okay, it's up 118 points. Not a big day, about 0.5%, and that's good. I mean, it's better than going down because you are at risk of a market crash. The stock market is at significant risk of a major correction because a lot of people believe that there are particular stocks that are significantly overvalued, and so you want to be really careful right now in the market. There's a lot of indication to say that you could have some tough days ahead. So just be careful as you invest, and but you can't stop. You can't stop moving forward. You can't can't stop conquering new territory just because you might get shot at. You just have to keep on moving forward. So let me let me go in here and look at some of your questions you guys submitted in advance. A couple things are on my mind today was one, in terms of stock market performance, this stimulus deal is a big deal. I saw where Warren Buffett today was basically telling Congress that they need to quit messing around and pass a stimulus package because small businesses are suffering, and small businesses are very important for the unemployment numbers. And so you're dealing with some of that. And I think they're going to listen. I think they respect Warren Buffett, and I think they're going to respond to what Buffett has to say. Now, Sandra says, I'm new to the program, so you may have answered this question before. Do you expect a stock market reversal or crash in 2021? I do expect a reversal. I expect a correction. A correction means that you could have some pullback. There's no reason to believe that it could be significant or long term, but a lot of what's going on with your economy now is it's supported heavily by government intervention. And so if that intervention ever ceased to exist, then the market would have to stand on its own weight. So it's a little bit like your son in college who keeps getting in trouble, and the only reason that he's not kicked out of school or the reason that he's not in jail is because his mama keeps bailing him out or his daddy's the dean of students or whatever. Well, eventually his luck might run out. So if that cushion ever removes itself with the market, then you could see some significant correction, particularly with some of these overvalued companies like the DoorDashes and the Airbnbs. I think DoorDash and Airbnb they are it's almost like in every generation when there's a crisis, there are symbols of excess. And I think that DoorDash and Airbnb might be the symbols of excess that exists right now in this market. People are the experts are kind of flipping on their head and freaking out over how much money people are paying for these companies. So believe me, they're going to start issuing more IPOs and pushing more stock to the market because they believe that these assets are overpriced. Let's see. Let's see. Corey says, I've already enrolled in the Black Business School. It's an additional charge for the investment club because I initially wanted to sign up for the $5 a day investment plan. Okay, well, the $5 a day investment plan is free. If you want to get the $5 a day investment plan, go to theallblackagenda.com. That's something we offer for free in the Black Business School. Also, firstshareofstock.com. Those are free resources that don't cost anything. Now, if you want to do the Black Stock Market program, then that's going to cost you $1 for the first month. So in order to be in the program, you get a ton of content. You get access to the private blog. You get access to the stocks I'm buying in my portfolio, things like that, in what Dr. Boyce is buying. So the first month is $1, so you can try it out. After the first month, if you want to stay, it's $89 a month. And I put this program up against anything you ever took in college. And I can tell you, we're sending a 17-year-old to college this year. And I know that the cost to attend Syracuse University, where I used to teach, is now $72,000 a year. So we compare quite favorably to alternatives. Plus, we're Black and we care about you, which you can't always say that about a lot of these campuses. So let's see here. Valjean says, hi, I signed up for the Black Business School. I want to learn how to trade options. What classes do you provide that do that for me? Um, yeah, if you want to learn to trade options, I suggest you go to. I have a great master class that everybody loves. The reviews are very high, and there's a money back guarantee in case you don't agree. But the options master class, I recorded it and it's still available. If you want to learn stock options, you can go to stockoptionsmasterclass.com. That's stockoptionsmasterclass.com. Now, the thing about options that I really just love about options is a lot of people only know the basics of options. It's a little bit like think of it like when people have sex. There are some people who understand the intricacies of love and connection and family and marriage, and then there are people that just know how to do it. They like to do it because doing it feels good, but they don't understand that there's a purpose behind doing it, and there's a lot of other ways you can do it that go beyond just the basic ABC 1, 2, 3 birds and the bees, if you know what I mean. So options are kind of like that too. Options have a huge adrenaline effect. Like people love to trade options because it's like shaking the bones and rolling the dice. It feels like you're at the crap table where you put down $500 and you can flip it into 1,000 or whatever. But the problem is that flips go both ways. Flips a flip. The financially sophisticated way to describe what brothers in the street might call a flip is to call that leverage. All a flip is leverage. A flip, and if you think about a flip can go this way or that way, right? So the same way you could flip 500 into 1,000, you can also flip 500 into zero, right? So flips don't always go the right way, right? And I can, if you use street examples, you've seen times where the flip went the wrong way, right? Where you thought you were going to flip 500 into 1,000, well, really $500 flipped into life in prison, or $500 flipped into ended up in the morgue at the age of 19, right? So the same thing is true with stock options. It gives you the ultimate flip if you use them on a basic level. But what you also find, though, is that when you dig deeper into options, I learned options. I was introduced to options not so much just as an investor. I was introduced to stock options as a mathematician. I was introduced to them in a way that laid out the theory on a real, almost like microscopic level, where you can actually break it down almost molecularly and look at what an option could do, all the different things options can do. And when you see it that way, it's like you see the keys to the universe are wide open. Like you can see all these possibilities that you can use options for that go just beyond the quick flip. So the way I teach stock options is, yeah, sure, I invest in options, but I use options in a lot of ways that I don't really hear a lot of people talking about. Like a lot of our family income every month comes from stock options that I sell on the stock that I have. And there's a way that you go about actually picking the options, the stocks that you want to own, so that the options will give you the best premium, and a way you manage and calibrate your risk so that you protect the value of the underlying asset. So anyway, I cover a lot of that in the stockoptionsmasterclass.com. That's a recording of the live masterclass. So it costs a lot less than it did to actually go through the program, but it's really, really good. And as with anything in the Black Business School, there's a 30-day, 100% money back guarantee. So if you're not happy, email us. Making you happy is like our number one obsession. So you will be happy. I guarantee that. So feel free to go take a look. All right. So let's see here. Sean says, Dr. Boyce, are you planning in the near future to teach futures or Forex masterclass? The answer is yes. We will do this in 2021, and actually, one of the things I want to do also, because I do trade Forex and futures and stuff like that, but those are not the areas those are not my first loves in terms of finance. But when you've taught like 25 different classes at the college level, you kind of understand a little bit about everything. And so what I want to do with Forex is I want to actually bring in some experts that do Forex in different ways, so that they can kind of talk you through different ways to kind of look at it. So anyway, if anybody knows people that are Forex experts that are not just trying to push like a multi-level marketing program or something like that, feel free to have them send us an email. My email for my team, my manager, is producer@flynubianmedia.com. That's producer@flynubianmedia.com. Or you can email support@theblackbusinessschool.com. Support@theblackbusinessschool.com. And then we can bring in, and really experts in a lot of areas. We like to bring in different types of people that have different points of view on Black wealth. Let's see. El High says, with the $5 a day investment plan, does that include the money you invest in your 401k, or is that $5 a day separate from what you invest in the stock market? It doesn't include money in the 401k. It's not specifically related, the $5 a day plan, to your four. It's not specifically related to your 401k unless you wanted it to be. It's very basic. It's basically the idea of saying, $5 a day is $150 a month. It's designed to illustrate a point to say that if you invest in the stock market randomly, don't overthink it. If you don't overthink it, if you put in the amount of money, less money, $150 a month, that's not even a car note for a lot of people. A lot of y'all have cars where the notes are $300, $350, $400 a month. So if you put in less than half of what a lot of people put in their car notes into the market, and you do that consistently, then you're going to be wealthy. You're going to be better off than 50% of all Americans, maybe 90% if you do it long enough. All you got to do is kind of move. It's like if somebody says, how do I get from New York to California? Well, you can think about it. You can think about the fastest way to get from New York to California. You can, say, well, if I take a plane, I'll get there faster than if I ride a bus. That's cool. But the thing you don't want to do is sit still, right? Like at some point, you got to make a decision and you have to start moving forward. Because if you just start moving forward, even if you're going slow, you're going to go further than somebody who sits still in paralysis of analysis. So a lot of times, financially, because people are afraid of the stock market, or they don't know what to do, or they don't know what stocks to pick, they make the biggest mistake of all, which is sitting still and being frozen and not doing anything. And if I was to tell you what the goal should be, the goal is really not, to avoid doing the wrong thing, because you're going to make mistakes. Everybody does. The goal is to avoid sitting still. If you sit still, you lose. Seriously. So you can take that to the bank. Take it to people in your family. Like if you sit still when it comes to stock market investing, you lose, you miss out, because in a way you're losing because you're competing economically against people whose incomes are accelerating. When you talk about keeping up with the Joneses, well, the Joneses, if they're invested in the stock market, their wealth is accelerating. They're earning money while they sleep because they own a piece of America, and America is getting economically stronger, to a point. At the very least, it's economically strong to at a certain level. And so when you're kind of trying to compete with that, and all you have is your paycheck, then I don't really know how you can actually win that race. That's really like racing somebody that's in a car and you're on foot, and maybe you think you can win the race because they have a raggedy car. Well, it doesn't matter how fast you run. A raggedy car can outrun the fastest human being on earth. So you got to get you a car. You got to get into a vehicle. Right. So figure out what vehicle you want to get into, and just go ahead and make your move, and then learn as you're going along. That's my belief. That's my 2 cents. It's not investment advice, but it's my experience. Let me see here. All right. All right, so I'm typing responses to your questions, because I know you guys in the program put your questions in the private blog, so I'm going to answer those questions first. China says, what is the best investment tool for my dad now that he's 80 years old? We already have 5 laddering CDs and savings accounts for emergency situations. I think that's good. I think that having emergency money to the side for your dad is extremely important. I think the question is whether or not, or what kind of legacy he wants to leave. Because if you think about it, with investing, one mistake I see a lot of is people thinking about investing as something that you only do if you're young, and that if you're older, you have no reason to invest because you're not going to be around much longer. But that you're kind of missing the point. At least in the Black Business School, we buy into a Powernomics sort of oriented philosophy, which says that wealth building is a team sport. It's a family endeavor. So to give you an example, if you would have followed that logic that says you should only invest if you're going to get the benefits, that's like saying to a mother, you should only be cooking if you're going to eat, right? How often do you see mothers and fathers cook food when they're not the ones actually eating? Somebody else is actually eating the food, but they spend the whole day in the kitchen, cooking this food for someone else to eat. Or how often do you see parents going out and working? A lot of dads out here, and moms too, right? Because moms and dads also, they both cook as well. But you see a lot of parents go out and will bust their butt to provide for a family. Well, what benefit do you get out of that? I mean, when my dad used to go and work his butt off. And my mother worked a lot too. When they would go work their butts off to take care of us, they didn't really have to do that, right? They could have just said, well, I'm just going to take care of myself, and that's it. But they didn't do that because they understand that feeding your children, feeding your family, taking care of your family, providing and protecting, etc., that's a team sport. That's something you do for the collective, for the group. So investing is basically, it's like financially feeding the people that you love. And when you're financially feeding them and you're cooking for them, when you're investing, you're growing plants and vegetables in your backyard that you're going to cook and clean and serve to somebody else. Well, that's not for you. Sometimes you eat the least, but you're feeding the most. And so for your dad, I would say, if he wants to leave a legacy, then I think that there are ways to maybe put some of the assets in trust. I hope that there are life insurance policies, because I think it's harder. Life insurance policies obviously get more expensive as you get older. Then that's an option. The other thing that you might want to consider is just the idea of him just buying some stocks. If you buy some stocks that and just says, look, I'm going to leave this in the family trust, and it's just going to be here for the family or be here for the grandkids when they grow up, then guess what? If he buys, 20 random stocks in the market of very strong companies, blue chip companies, Disney, whatever, then in 20 years, I guarantee you, there's a very good chance that those stocks are going to be worth a whole lot more than they're worth right now. If somebody had done this 20 years ago, and just said, okay, I'm going to buy some stock in Disney, General Electric, maybe, well, G is a bad example because G's has some tough years, but, pick some other, IBM, whatever, Google, Microsoft, then these assets would have a tremendous amount of value later on down the line. So maybe that's an option, right? So you might buy some shares of stock and leave them in the family trust. Or, maybe not even leave them in a trust. Maybe just have them in, some sort of an account, a Robinhood account, and just leave that, for future generations or whatever. Let me see. Another question here is, hello, Dr. Watkins. Can you provide a rough estimate of how much income I could possibly make per month with stock options if I have 10K to invest and I take your options course? Let me think. On my options, I earn about, let me think here. I earn about 10% per month ROI in a lot of the options that I own, but I tend to pick stocks that have certain characteristics where the option premium are going to be pretty high. It comes down to implied volatility, and so with that, it's like it's a little bit like riding a Bronco to work every day. You got to know how to ride that horse, and you got to understand how these or I guess Broncos or bulls, or I don't know if a Bronco's a bull or a horse, but I guess a Bronco's a horse, right? So if you're riding a wild horse to work every day, you got to know how to ride the horse. You got to be a horse whisperer a little bit. And so the stock options course kind of shows you how to be a horse whisperer, how to pick the right assets for that options portfolio and manage them properly. Now, if you took the safe route, you might drop to a lower monthly ROI, maybe 3-4% per month, maybe more. So I don't think it's out of the question to take $10,000 and invest that and earn, say, an extra $400, $500, $600, $700 a month. That's very easy to do. Maybe even as much as $1,000, $1,200, $1,300 a month. So when you get that capital base, and the key idea is once you start building that capital, you don't want to take that money and just go spend it. I personally like to reinvest my capital. Right. My goal long term, if you want to know my big wealth goal is to build a capital base. I was talking to, I was talking to Alicia this morning on our morning run. And, the thing is that we were talking about, things like getting pre-approvals or whatever for mortgages. And we're going to buy a house at some point in the next couple of years. And we have a house. We're going to buy a different one. And one of the things I thought about was I said, it's really difficult as a business owner, especially a business owner who doesn't care so much about profitability, because I'm a big investor. I reinvest everything because I want to grow everything as big as it can be so we can have maximum impact, and when we make movies and whatever. If I make money from a movie, I literally reinvest almost all that money, because I don't buy material stuff. I don't care about expensive clothes or fancy cars and all that. And so Anyway, I said it's really hard to get banks to understand people who don't live paycheck to paycheck. I don't know if anybody else has ever had that issue or not, but banks don't always get that. Like they get paycheck. They understand paychecks. They understand W-2s and income, and they'll say, okay, here's your income to debt ratio or whatever, or you know. But when you're a business owner, let's say you have a great business and you have tons of cash flow, but you don't have much of a profit because you don't want a big profit because you're writing that off on your taxes. That really showed the culture of a lot of people when they got really mad because Trump didn't pay a lot of taxes. Well, a lot of business owners minimize their tax bill. Jeff Bezos, all those people, there are lots of billionaires in America right now who won't pay a penny in taxes. And it's not because they're poor. It's not because they don't know how to make money. It's because they know how to protect their money. They know how to write things off. That's why I tell everybody, in here, every black family should have a family business, because when you have a family business, you can write off a big chunk of your lifestyle. Like you can take the family out on a trip to, San Tropez, and you can write off a chunk of that. Like you don't want to do anything illegal. You don't want to evade taxes, but rich people do that stuff all the time. They spend less for things than you spend. So when you see a rich person that has a private jet or a private helicopter, usually that's a business write-off. They're using it for business purposes, right? So anyway, going back to that point, where was I? Oh yeah. So with with a lot of the mortgages or whatever, um, I said to her, I said, it seems that these banks, if I was a banker, I wouldn't be as concerned about your income as I was about your cash flow and your assets. Because if you have assets and you put those assets up for collateral, then that protects my loan, right? Like if I loan you $500,000 and you put up, $300,000 in collateral, then that means that if you don't pay that loan, you're going to lose $300,000. That's a lot to lose. That means that if my butt burns, your butt burns too. And then if you don't pay the loan, what do I care? I get your $300,000 and I can take your property too. I can take your house and go sell it to for the same price I sold it to you for, right? So it's funny to me that we don't talk as much about assets as about income. And I think that my little point that I'm making that for you is focus on assets, focus on what you own, not how much money you make. I mean, how much money you make is like the first step. It's like, again, like like making a baby or raising a child. There's the first step of making a baby, and y'all know what that is. But then there's like 1,000 steps after that. And if you're thinking about family and children, you can't just think about the first step and not focus on the other 25,000 steps that happen after that. So the other interesting thing is just to that point, I was watching Fargo. I don't know if anybody's been watching the latest season of Fargo. It's really good. Chris Rock is on it, and in Fargo, one of the things that happened, it was a 1950s story with these gangsters. So you had the black gangsters against the Italian gangsters, and they had the Irish gangsters and all that. And one of the things that the gangsters would do to keep the peace is each gang leader would send their oldest son to live with the other gang leader, right? So Chris Rock was sent his black son to go live with the Italian guy, and the Italian guy sent his oldest son to live with Chris Rock. And their whole argument is it's like mutually, what do they call it? Mutually shared destruction, or mutually guaranteed destruction, or whatever. It was really collateral. It's basically saying, I know that you're not going to hurt me, or I don't believe you're going to hurt me, because if you hurt me, I got your son, right? And that's a heck of a price to pay for you to renege on your agreement, or whatever the case may be. So when banks charge you collateral, it's kind of the same thing. Obviously, it's not exactly the same thing, but it's a similar idea. So anyway, let me keep going. So I think that assets matter more, or what you own matters far more than what you make. What you make is stage one. Like that's what you think about when you're in your 20s. When you get to your 30s and 40s and 50s, you should really be thinking heavily about what you own. Let's see. Sean says, Dr. Boyce, does beta represent how volatile stock is? If so, what beta number represents the starting point for a highly volatile stock? So what I'll say to Sean is, great question. I'm typing as I talk. Beta represents how the stock moves relative to the market. So basically, if the market moves up 1% and you move up 1.2%, that would mean your beta is 1.2. So a stock with a beta of 1.2 moves 20%, moves 1.2% for every 1% that the market moves. Okay, so because I don't know if Sean's here or not today, so I want to make sure I type an answer to his question. So there is no clear benchmark on what defines a volatile stock. It's all relative. So volatility is pretty relative. So some would say a stock with a beta of say 1.8 is more volatile than a stock with a beta of say 1.3, right? So let me type this in. Okay, there we go. All right, so there's the answer. All right, so yeah, so basically, and here's the other thing too. Beta is one measure of volatility. Beta is not the only measure of volatility. There are lots and lots and lots and lots of ways to measure volatility, and volatility is really a proxy for the thing you're really trying to get at, which is risk. Risk is what you're trying to understand and connect to, and there are a million different ways to understand how risk works. There's not just beta and volatility and all that. There's also what they call jump risk. Jump risk is the risk that things can just change like that. So for example, a real life example of jump risk might be if you are a dope dealer and you make $10,000 a week delivering packages, for Big Willie down the street. Well, every day might be pretty normal. Like most days might be pretty easy money, right? Seem like easy money, but there's always that one day where it's not easy money anymore. That one day where the feds, finally raid the trap house or whatever, and bad things happen, and that's jump risk. That the risk of jumping from one reality to another, just like that. So that's and maybe stock market crashes might be a type of jump risk too. Like you never know when stuff's just going to pop off and bad things going to happen. But then there's also just standard volatility, meaning like beta is kind of like if you look at ships on an ocean, how Obama used to say the rising tide will lift all boats. Well, he didn't factor in beta, in terms of like if you think about an ocean that has a bunch of boats on it, and every boat represents a company, right? So you got the small boats, which are the small companies, the big boats, which are the big companies, and the boats not only are different in terms of size and location, they're also different in terms of direction. Some boats have experienced captains. Some boats have, inexperienced captains. Some boats are going east. Some are going west. Some north. Some south. Well, if there's a big tide that comes through in that ocean, then that tide's going to affect all the boats, right? And beta kind of represents like a number that reflects how each boat responds when the big tide comes through. So the ocean is like the economy. So when the economy has something big happen, like we get a new president or there's a war or the president says something crazy on Twitter, well, it's going to affect everybody on pretty much. But the way they're affected is going to differ, right? The big boats that are going east might be affected differently from the little boats that are going south. Or the boats with the really good captains are going to steer differently than the boats with the really bad captains. So beta is a unique number that reflects the differential in terms of how every boat responds to changes in the ocean. A stock with a beta of 0 is like a boat that's not even in the water. It's like a boat that literally does not even move when the water goes up because it's been put on the sidelines or whatever. So a stock with a high beta is a stock where like it's like a boat where when the ocean tide goes really high, that boat capsizes because it's going to have a really violent reaction to what's going to happen. Whereas a stock with a low beta, like say 0.3, is like a big gigantic super tanker that barely feels the wave, right? If you've ever ridden like one of those big cruise ships, like a Royal Caribbean, like gigantic ship, like you don't even feel the water. You don't even know you're on the water because the ship is so big. It's not even affected by the waves. But if you ride a little boat, you kind of feel every wave. I was on a little boat in Miami last year. I was live streaming actually, and I was holding on to the rail. And people on the live stream were saying, "Boyce, don't hold on to the pole because it's going to make you sick." And like right at that moment, like I got so sick in my stomach, and I just ran to the side of the boat and I had to throw up. And I never had that happen before. But anyway, that would be like a high beta type situation. Okay. And by the way, some of you are asking about this. We actually have a program. I don't get to talk much about it, but it's a good one. It's called Young, Black, and Rich, and it's basically designed for young people. I would say millennials, but millennials are actually in their 30s. So maybe, if you're in Generation Y, Generation Z, and you want to figure out long-term strategies to build wealth, it might make a good gift for your kids, or it might be something that you may want to look into. It's the YBRprogram.com, the YBRprogram.com. YBR stands for Young, Black, and Rich. And it's basically a compilation of all the things I wish I'd understood when I was, say, 23, 24 years old. Because if you do certain things while you're young, you can really be secure later on in life. And the reason these conversations I think are extremely important is because we don't talk about that. We don't have a lot of people that encourage our young people to make good long-term decisions with their lives or with their money or anything. So it's kind of sad. So anyway, Beverly says, I hope you're having a great day. Big question. I'm invested in the total stock market. I got all my investment knowledge from reading. I've only been in the stock market for 5 years. I want to make my portfolio stronger. Should I try real estate or a more aggressive approach to passive investment is great, but not my end goal. I'm doing this on my own. Should I get an advisor? Okay. I don't think you need an advisor to invest in the stock market. I don't think advisors are necessarily, they might be better at kind of explaining what types of stocks or investments you might look for if you have certain goals. So investment advisors can be good for that. What I like investment advisors the most for, though, is they're really good at kind of getting in tune with your long-term financial plan and helping you figure out where you are relative to where you're trying to go, and then giving you these projections on where they think you'll be, and so you can do things now that'll put you where you want to be a few years from now. So if your goal is like to retire early, they can kind of show you like where you got to go to get there. So I think investment advisors, if they don't cost too much money, are worth it. But I also think deeper to your question, Beverly, about real estate. I think real estate is an important part of a balanced portfolio. I don't think the stock market is the answer to all your prayers. If I were you, I would, this is not investment advice. This is just me thinking out loud. I would be very careful about putting all my money in the stock market, because all these things that people say about the stock market being risky or the chances that you could lose everything, that's real. That's not made up. The economy has some real serious fundamental problems and anything can happen. We talked about jump risk a minute ago. We could just jump to a whole different reality and crazy things could happen. But the thing about it is the mistake people make is they run away from it completely, and they completely miss out on all the money that's being made while you're waiting for the world to end. People write these books every couple of years about how the whole economic system is going to collapse and blah, blah, blah. And it's never happened, right? But they sold their book. They made $10 million from selling their book because people like a doomsday story. People like to believe that the things they don't understand are inherently evil and terrible and apocalyptic. And that's just not true. You just don't understand it, right? That's it. So people who don't understand the financial markets, they get scared. They say, they come up with these horrible conspiracy theories, and then they use that as an excuse to stay away. All the while, the people who participate are building massive wealth right around them. So you want to participate, but you have to also understand that the root of these conspiracy theories, or this idea that the economic system may collapse, those things could happen. There are real risk factors in the economy and in the market at large. So I would say that investing in real estate allows you to spread out a little bit, so that in case the stock market does something really crazy and terrible, you're going to have money in other places. I'm also a believer. I know different people have different views on this, but I'm a believer in buying a home. I know Grant Cardone. I think Grant Cardone, he's this guy on the internet who's really smart. He's a great salesperson and stuff. He had done this video saying that buying a home is stupid and it's for suckers and everything else. I didn't like the video because I felt like he was doing it for shock value. And I just kind of gave a little rebuttal to it. And so he messages me and asked if he could come on my podcast to explain himself. And I said, no, how about I come on your podcast and explain myself? And they didn't respond after that. And I knew what he was doing. He wanted to come in and do his thing and whatever, and get people to go buy whatever he's selling. But that's beside the point to me. The point is to say that when you talk about owning a home, I think I'm a fan of home ownership because I think there are some things that are more important than money. I don't think it should be money. I see money as a tool to get to the real wealth. The real wealth is fulfillment and happiness in your life and feeling peace of mind and Like, you don't want to be a rich person who hates your life. Like, that's not a good existence to have, but you don't want to be broke either, right? Being broke kind of sucks too. It sucks a lot. I know what it feels like. So, you know, owning a home to me is something where you say, you know what, I'm not here to make my landlord rich. I want to actually have my money go toward the accumulation of some sort of wealth for me and my family. I want it to go into my pocket, not somebody else's. Now, sure, there are other ways that you could actually build that wealth. In a way, you think of it like a susu. Like, susus are natural savings vehicles that are community driven, where you come together with people you trust and you form kind of a pact and a code of conduct, and everybody contributes every week. Everybody does their part, and then every few weeks you get a big payout because they're forcing you to save. Now, there's nothing special or magical about a susu from a financial standpoint. Your money isn't actually growing. In fact, it's probably not even the best financial vehicle you can have. But what if you're just a person who can't save? What if you're a person who has trouble getting things done on your own? Well, the susu can be a wonderful thing because you get a chance to bond with family around something economic. You get a chance to have accountability where you're pushed to reach your economic potential a little bit more. So in a way, it's like it's like if you have somebody that's really morbidly obese, and they form a little exercise group with their other friends who are struggling, and they all get together and they go for a 1 mile walk and a half a mile run, and they do this 3 times a week. Well, sure, that's not the type of training that's going to get them into the Olympics, but it's better than nothing. And that's the point. It's better than nothing, right? So I believe that owning a home is better than being a renter, especially if you're a renter who has trouble saving and investing. And also, there are benefits to home ownership that are non-financial. Like, I love being a homeowner. Like, I love knowing that we're stacking cash over here into our house. I love knowing that I have the house I want, and I set my basement up just like I liked it, and it was free because every dollar I put into finishing the basement, I'm getting $2 back, I'm sure, on the value of the house. Like, the home value has literally gone up twice as much as the amount of money I put into the basement. So it wasn't even spending money. It was literally an easy investment. And I get to enjoy the basement. I have my man cave with my big 70-inch, big screen TV where I can watch all the football games in HD, and that's fun for me, right? So I think that when people get to the point where they start making these arguments that are almost one size fits all, I don't think that that's appropriate. I think the only thing that can be one size fits all are basic ideas like I think one size fits all might be freedom. I think most people like freedom. Very few people would rather be slaves than to be free, or happiness. Most people want to be happy, right? But when I talk about investing, I'm very careful. I choose my words very carefully because it's not one size fits all. It's really about knowledge, because if you have more knowledge on investing, then you can figure out what size fits you. Like clothes. Clothes are not one size fits all, right? So a person that you're trying to help them find the right outfit, you can throw some suggestions in, but you have to be really careful, because if you tell them like, oh yeah, I love for fluorescent green, right? That may not be their color. They may not enjoy wearing that color, right? So you'd be better off showing them a range of options and helping them figure out what color works for them. That's what I'm getting at. So investment is kind of a custom made kind of thing. You got to get your knowledge and information so you can make the decision that works for you. All right. So Sarah says, I bought a call option for 2022. It's up and I want to cash out, but you said don't leave money on the table. What should I do not to leave money on the table? I think that if you want, if you want to cash out, cash out. I mean, there's nothing wrong with cashing out. There's nothing wrong with selling an option, because when you sell the option and it doesn't expire till 2022, you don't want to exercise the option. Like, that's different from selling the option. Selling the option means you just put it back on the market, and people have to pay two elements. If it's in the money, they have to pay the actual what they call the intrinsic value of the option, which is the amount of money that the option's worth if it were to be exercised. And then they have to pay the time value of the option, which is the extra that's on top of that, based on the fact that anything can happen between now and 2022. So long story short, if you want to go to the market and sell your option, there's nothing wrong with that. I mean, I've done it on many occasions where maybe I bought a long-term option and the stock shot up and the option is suddenly worth all this money and I've got like an 80% ROI. Well, why not? I mean, if that's what you want to do it. There's no right or wrong answer on that. I think also maybe thinking about what you want to do long-term might be more important. Like, if you think that, for example, I'll give you a real life example. I have been talking for a very long time to you guys about Disney and how much I love Disney as a company. I just think Disney is awesome. I love the management team. I think that they're going to figure out how to make money in any economy, in any reality. There's no reality that exists where Disney, Mickey Mouse ain't going to figure out how to get their paper, right? And so, because of that, as I was talking to you guys about it, I was talking to you about it because I was investing heavily in Disney. And what I did was I did something that we do in our stock options masterclass, which is I did a stock replication strategy. I didn't want to put up all the capital to buy Disney stock. So instead, I bought deep in the money options, deep in the money long-term options on the company. I said, look, Disney may not be making money now, but I believe they're going to be making money by the year 2023. So I bought super long-term, deep in the money options on Disney, and Disney stock after they made all their announcements about all their whole crazy lineup, and Disney Plus is taking off, and then also COVID's going to end soon, so now they're going to start making money from theme parks and live sports again. Disney stock has just gone crazy. So what's happened because of that investment is that the value of those in the money call options have gone insane. Like the option, when you buy deep in the money call options, the stock and the option kind of move almost in lockstep, like two wide receivers running down the football field, and or the defensive back and the wide receiver running step for step with each other. That's what those two assets kind of do. The difference is though that the deep in the money call option costs me less in capital than buying the actual stock. So now that Disney investment has made maybe 70% ROI. So I'm kind of in this dilemma, like, okay, do I sell my Disney or do I hold on to it? Well, I'm holding on to it because I believe that there's more to come with Disney. I think Disney is just beginning. I think Disney is going to blow the socks off of 2021. And as the world realizes that, and as the vaccine gets out and all that stuff, I think Disney stock's going to continue to climb. But then again, I don't know. I say all these things with a grain of salt because I can tell you what I think is going to happen based on what I see. But the thing about investing is nobody really knows for sure. And anybody who tells you they know for sure is usually lying to you. They're taking advantage of your lack of knowledge relative to them, or what we might call information asymmetry. They're taking advantage of the fact that because you don't know what's going on, it's easy for them to sound like they know everything, and they just don't. As a person who knows a lot more than whatever expert you talk to, like I've trained financial experts, I can tell you that all these people that do charts and analyses and tell you what's definitely going to happen, they don't know nearly as much as they say they're going to, because uncertainty is there for everybody. So anyway, long story short, I'm going to stay invested in Disney because I want to be on the Disney train forever. Like, so when they release Black Panther 2 and they're making all this crazy money from the release of Black Panther 2, I want to say, look at how much money we made, right? I don't want to be sitting on the sideline saying, oh, there you go, making money off Black people. That ain't right. That ain't right. No, I'm going to be like, yeah, go see Black Panther 2. We're making money because Black Panther 2 is a blockbuster. All right. So don't just, if you can't beat them, join them. Like, there's nothing wrong with owning a piece of America. They've owned you for many, many years. I think you should own them. And by the way, I don't know if you guys have taken a look at the Black Wealth Bootcamp or not, but we start January 7th. And the Black Wealth Bootcamp is a special program I put together 5 years ago that was extremely popular. We just brought it back. And basically, the goal is to talk about strategies to remove dependence on the corporate plantation. One of the things, so it has a mixture of economic training and Black liberation. It's taught from a Black standpoint. I'm very Black. I make no apologies for that. And basically, the goal of the program is to say, how do you create a world where you reduce your economic dependence on whether it's that job, or you put yourself in a position where you never have to look for a job again, or if you do have a job, you can put yourself in a position where you could quit anytime you want to, right? Because I think COVID kind of woke a lot of us up to all the things that can change very quickly. Also, as the world evolves, you don't know. You may be required to get vaccinations or something. You may not want to do that, right? It is just good to have options, right? So that's what the Black Wealth Bootcamp is all about. So if you want to go take a look, you can go to blackwealthbootcamp.com. That's blackwealthbootcamp.com. All right, so let's see here. Adrian, do you think it's a good idea to buy XRP? Now I'm in the Zoom chat, by the way, in case you guys want to know where I'm at. I was answering the students' questions that you guys left first. I want to get those first because that's the benefit of being in the program, is you get that top priority. I promise you guys, when you sign up for the Black Stock Market program, that I answer all of your questions, every single one of them. So I always get to you guys first. And then now I'm going to go to take a look at what you put in the chat. Okay, so Adrian says it's a good idea to continue to buy XRP. Nobody knows. Nobody knows what XRP is going to do. I can tell you what I'm going to do. I'm going to buy XRP, and I'm going to buy a lot of it. And I like XRP because I like the model. But I could be completely wrong. XRP could fall straight in the toilet. But it's not because it's not a solid investment. It could just be because the world changes and nobody knows exactly how it's going to change. Let's see. Cirillo says, I have a college 529 plan for my two kids. Is this a good idea, or should I shift to something else? I think 529 plans are good as far as solving that problem. I think the fundamental issue is with college. Like, we got a 17-year-old who's about to go to college right now, and our fundamental core belief. We have some core beliefs in our family. One is, well, his mother's a college professor. I'm a college professor. We both believe in going to college. We think college is a great experience. It's a lot of fun. You have the rest of your life to live the rest of your life. So if college is in the cards for you and that's a fit for you, I think college is pretty awesome. And it contrasts a little bit. It's a nuance that might confuse some people because they hear me critique college and they think that means I'm saying you shouldn't go to college. No, I think college is a lot of fun. But the other core value that we have is that you should not spend too much to go to college. Overspending on college is one of the great destroyers of Black wealth. A lot of your Black wealth, about $1 trillion in your Black wealth, at least $1 trillion, has been sucked up by universities that have put you in so much debt that you can't repay it. Half of all Black college graduates default on their student loans. That's significant because what they've done is they infect you with like a financial STD. And I call it a financial STD because what it does is it inhibits your ability to kind of do other things you might want to do. It affects you for life. It's like there for life. It's a virus that's in your financial DNA for a lot of people that they never eradicate. And so in a way, you can also compare it to maybe like sharecropping, where with sharecropping, the whole idea behind sharecropping was that you tell people, hey, we're going to give you this opportunity to have a better life. So to get this opportunity, you have to take on a big chunk of debt. And debt in itself is not a bad thing. The problem is that the debt will be so high, the debt must match the revenue stream. Like the debt and the revenue stream must be, equally yoked, or you're going to have an imbalance issue where the debt is up here and your revenue is down here, and you never ever work your way out of debt. It's almost like those when those mafia bosses make a loan and they charge you like 20% a month interest. Well, if you fall behind on that loan, you're never catching up. Or also the IRS. When Joe Lewis got into tax trouble, he never got out because it's like financial quicksand. The more money he made, the more money they would tax, the more they would add to the debt, right? So it's like in quicksand where the more you try to get out, the more you get sucked in. So basically, the goal with college is if you go, you always, no matter what you do, have to learn. If you're Black, you must learn the fundamentals of having your own business. No question about it. Even if you don't do it, everybody should learn that just in case. Number two, you should always be an investor and focus on asset accumulation more than you focus on income. They trap you in college by convincing you to think that how much money you make on that job is the be all end all. No, it's not. It's how much wealth you accumulate. It's not how much money you make. It's how much money you keep. Number three, when you leave college and you take that job, your debt, if you manage the debt, you keep the debt low, you make sure your income is high for whatever profession you pick, so that way you can kill off the debt. And then because you've been trained on this Swiss Army knife of economic possibilities, then that child should be able to go out and say, the reason I have this job is because I have a broader economic goal that relates to asset accumulation. My goal is not to just be a middle manager at this company. My goal is to be in a position where I go beyond that. It's a higher goal. The goal is I want to be financially secure, so that whatever happens, I'm going to be okay. So if I'm a young college graduate, I'm coming out of school, maybe let's say I have 20K in debt. I'm making 60K on my job because I picked the right major. So I can knock out that 20K in debt in a reasonable amount of time with some financial discipline. But then just in case, I'm a person who likes to spend money. My dad or my mother did a couple things for me. One, they created an asset base for me since I was a baby. So they've been investing in stock for me since I was an infant in the $5 a day program or whatever, right? So I've got, $100,000 in stock sitting over here just in case of emergencies or in case I decide to quit my job one day. Number two, I also have the ability to go out and invest in my own assets. So I'm buying stock regularly. I'm maxing out my 401k. Number two, I'm looking to buy a home as soon as possible because my goal is not to make my landlord rich. In fact, I may take some of the money that my mother and father put aside for me in my stock portfolio and use that toward the down payment on my first house. So now I've leaped the fence from being a renter to being an owner or to being a landlord if I want to be one, right? So then I also have the option to do things like invest in multifamily property, or if I'm out to dinner with my friends and we come up with a great business idea, there's nothing stopping us, right? There is no there is no situation where we must abort a $10 million idea because we can't afford to quit our job right now, or I can't afford to quit my job and still pay my student loans, or I don't have any capital to make my move. Do you understand what I'm saying? When you think about economics in a certain way, you can position yourself where you're able to get max benefit from the life you have, and then also be able to move to the life you don't have, which again, that goes back to one basic word. The word is freedom. Freedom, that's it. Like you're free. Like you don't have any financial barrier stopping you from doing exactly what you want to do in that moment, right? And it can be even as basic as saying, God, I'm so tired. I need a vacation. I'd love to go to Fiji. Okay, well, I'll take $10,000 out of my bank account and go to Fiji. Like the money doesn't factor into why you go. If you think about it, think about how many things we do or can't do because we don't have enough money to do them. All those problems can be annihilated, but you have to think about it in the right way. You have to plan in advance. So you got that child at home, you can position them to have that life that I just described to you. And it took me a moment to describe it, but it's kind of important because a lot of our most talented young people can't make moves. They can't do what they want. They have big dreams. The dreams are bigger than their reality because they have no money in the bank. They have no skill to acquire assets. They have too many student loans, so they can't quit their job. So they're basically sharecroppers. They're stuck, and if you're in that category, I'm not. I hope this didn't make you feel bad. It's really to help you understand the dynamics of the problem for two reasons. One, so you can figure out how to get out. And number two, so you can actually help your children avoid that same trap. Okay. All right. So anyway, let me keep going. So yeah, the Black Wealth Bootcamp, it starts on January 7th. You can actually still get the 30% discount. We're going to end the 30% discount in 2 days. So if you want to get the early bird discount, go to blackwealthbootcamp.com. Let's see, Eric Turner. When selecting a business name, do I need to include LLC in the naming? No, you do not. You can do whatever you want to do with that. Chris Baker, when you have your what Boyce is buying picks, how many shares do you typically buy? It varies, Chris. It depends on, sometimes I might buy a lot, sometimes I'll buy a little. It kind of depends on how strongly I feel about the investment, how much it rebalances my portfolio. It also comes down to available cash. If I don't have any available cash at the time, I might just buy a little bit. Sometimes I'll buy a little bit just to remind myself that I want to buy more. And I'll go through and I'll be like, why did I just buy 2 shares of that stock? Oh, that's right, because I want to remind myself to buy 50 when I have the cash. So sometimes you need cash flow availability to be able to make the moves you want to make, but sometimes you just stick a pin in it until further notice. Robin, your advice on buying Alibaba? I like Alibaba. I think it's a good long-term company. I think if you're talking about Alibaba in China, one concern about Alibaba is that the government is really cracking down on billionaires, particularly Jack Ma. The Chinese government they do not like threats to their authority. So Jack Ma in China is a billionaire who happens, if I'm not mistaken, to be a little bit outspoken. That's relative to Chinese standards. Like the Chinese people are not typically they just don't speak against the government like they do here. I mean, in China, you speak too much against the government, you'll come up missing. And so Jack Ma's kind of challenged the authority of the Chinese government. And sometimes when that happens, they go out of their way to teach them a lesson. And I know that Tencent, another major Chinese company that Jack Ma has a significant investment in, was about to go public. And the Chinese government passed some BS regulation to basically stop the public offering. Like, so it literally cost them billions of dollars. And some say they did that to make a point. And the reason I bring that up is because that makes me wonder how safe an investment in Alibaba actually is. So that's like a risk channel that's kind of out there. Let's see here. Once your portfolio reaches a little over $1,000 in investment in, say, Cash App, would you continue to invest in that portfolio, open a new account, or to create a new one? Asked Lydia. I wouldn't switch over. I think you can keep going with the same account. The one reason though that I do use different apps is because, you know, long term, I don't want all my money on one app, because I don't completely trust technology. I don't complete if I don't know exactly what's going on in the black box. I'm always thinking about the what ifs. What if they get hacked? What if the system goes down and they just forget about my money? I don't know all these issues. So I spread my money out for that reason. Let's see, Nehemiah. I signed up for the Black Financial Channel, but Stash and Acorn and Robinhood are not available outside the USA, and most of the platforms have high fees except Wealth Simple. But it's a robo advisor. Is there another app you can recommend? Yeah, Nehemiah. There are apps in different countries. I don't know which country you live in, but I know, for example, if you live in England, there I think Robinhood's trying to expand there, but I don't think they're there yet. But I think they might be there this year though. But there are other apps there, like there are competitors to Robinhood that exist in places like England. So you may want to look for like Google search, your country, and look for like Robinhood alternatives in my country, things like that. That might help you figure out which app will work because you're right, Robinhood and Stash and Acorn, they don't work around the world. Let's see, Nehemiah, what do you think about Online Trading Academy? Never heard of it, so sorry, I can't speak to that. Sorry, my apologies. Let's see. Terrell says, "Hey, Dr. Watkins, can you provide a rough estimate of how much income I could possibly make per month with stock options if I?" Okay, so you already asked that question about the stock options. We talked about that one. What's the best life insurance policy to get? I like term life instead of whole life. Whole life, I think my argument is that whole life pretty much is where they invest your money instead of you investing your money. So I like term because I'd rather invest my money than have them invest my money and give me my cut. I'd rather just invest it myself. So and then just buy another term life policy when that one expires. But there are different philosophies. There's some people who like whole life or universal and stuff like that. Largely because these policies don't expire. So that might be a preferred option, but you're going to pay for that. Like everything, like there's no such thing as a free lunch. So what I do with my life insurance is I think about the core reason you have life insurance. The main reason you have life insurance is to provide. The primary reason is to provide for the people that you provide for right now in life, to make sure they're good. So if I am a man who has a 5-year-old, I'm thinking about life insurance very differently than a man who has a 35-year-old child, right? If I have adult children, then those children, they should actually, they should get an inheritance from me, but it shouldn't necessarily just come from my life insurance policy. It should come from my assets. Like my parents are up in age now, and we talk about, the inheritance, from them, and we're not talking about life insurance. We're mostly talking about the house. We're talking about the money they put in their stock portfolio over time, things like that. So that's what's supposed to happen. So let's say you decide instead of going whole life, you go term. Well, so you buy the 30-year policy, which is a pretty long time. And the whole time, that whole 30 years, you're taking that extra money that you would have put into the whole life policy and you're putting that money consistently in the stock market. Well, that could easily accumulate to hundreds of thousands of dollars, right? So it's not as if having a term life policy and having that expire means you'll have nothing to pass back to your relatives. That's not theoretically what's supposed to happen. What's supposed to happen is that extra income capacity that you save by not doing a whole life policy, that money should be getting put to work. You're not supposed to just take that money and go spend it at Popeye's chicken or whatever. You're supposed to have that money working for you in some sort of investment. By the way, some of you are asking about this. The Black Real Estate Weekend starts on the 19th. So if you'd like to still join us for the Black Real Estate Weekend, if you're interested in real estate, we gathered a collection of some of the baddest Black real estate experts out here. Julian Gordon across the board, some amazing Black women who are extremely good at real estate. And we're going to spend 2 days pretty much digging into every aspect of real estate, from home ownership to multifamily to commercial property to tax lien selling, stuff like that. So feel free to go to blackrealestateweekend.com if you want to check it out. It's blackrealestateweekend.com. So you're going to love it. It's going to be really great. I'll be there too. I'll give a couple of speeches as well. Let's see here. Yoel says, Dr. Boyce, I want to get into real estate. investing, but understand there are many avenues. What are your recommended ways to do that without having to be a hands-on landlord? Well, first of all, make sure you come to the Black Real Estate Weekend. That's what that's all about. It's blackrealestateweekend.com. But second of all, and if you're watching the recording after the fact, you could probably go to blackrealestateweekend.com and buy the recording. So it's up to you, depending on how you want to do it. But anyway, um, you don't have to be a hands-on landlord. I had that same problem when I bought my first rental property. Um, I remember thinking, I really don't want somebody calling me at 2 o'clock in the morning telling me I got to come fix the toilet. I'm going to be a terrible landlord. So I'm not even going to play that game with myself. And so what you want to look into is there are property management companies that you can hire that don't charge very much money that will do all that for you. They'll list the property, they will do the repairs, they'll do all of that. They're going to charge you for it, but the monthly fee that they charge is not that bad. So the property that we own, um, even after if you take the rent, here's the hustle with rental property that's really almost embarrassingly biased in favor of investors. It's sad, but it's something that you should understand so you can put your family in a good position. The amount of money that we charge in rent based on what the property manager recommended. Like I just said, okay, well, what's the going rental rate in this area? She told me what the number was. I said, okay, fine, charge that. The amount that the tenant pays in rent exceeds the amount that we pay on the mortgage. So basically the tenant pays our mortgage for us. And then when you take the money that comes in from the tenant, the property management company takes a little bit off the top, and the rest of that money belongs to us. And all that money goes into an account on autopilot, where out of that account, the mortgage payment gets paid, and every month we're just automatically saving money just because we own the building, just because we own the unit. And I swear to you, when I tell you this, the one unit I think about in particular that we bought not too long ago, if you asked me the address of that place, I probably couldn't even tell you the address. I have not been to that place since before COVID. I think the last time I was there was February. I remember what part of the city it's in. I remember what the building looked like. I do not know what unit it's in. I don't remember anything. But I do know that all throughout the whole pandemic, those checks were coming in because the tenant was paying her rent. So real estate is probably a more valuable skill to understand than anything you ever learned in college. And I'm not, I would just tell you that if you want to really prepare your children to be empowered, just have them spend some time learning little stuff like that. The thing about America that really sucks, but it's a great opportunity for those of you that are smart, is that the people that make the most money are the ones who, in many cases, do the least amount of work. And it makes people really mad, and they say, "Oh, you're not even working, and you're not making any money." Yeah, but the people that make the money, they do a lot of the work up front, or maybe they're in a position where because somebody coached them on how the game works, they're able to work a little bit smarter, if you want to call it that. Not to say hardworking people are not smart; they are, but unfortunately, many of them are cursed. They're infected by a generational curse, where you don't even go look behind the curtain to see what's back there because somebody tells you that curtain is not for you, or they just say don't even look back there, right? And the smart person will open the curtain up and say, how are those rich people doing this, so they can learn how this game works. It's really not that complex. So that's me being as honest with you as possible about how important it is that you make sure your children are trained on the basics of investing. America is a really rigged, biased country, and and there are so many people that are hoping that one day capitalism will fall and America is going to change. And good luck with that. Good luck in changing America from the country that's been for the last 400 years. I hope that works out for you. But there are those of us also who just say, you know what? Tell me the rules, and I can make sure my children know how to position themselves, in a way where they can benefit from the so-called land of opportunity. That's my 2 cents. Okay, so let's see here. Samuel, I started a car dealership in 2018, but my business has not taken off where I'm comfortable to leave my 9-to-5 job, especially during this epidemic. So how would you, how would I invest in order to build my business? What do you recommend? I recommend if you want to engage in business development, we have an entrepreneurship program, Black Money 103, blackmoney103.com. That's our entrepreneurship program. It's the third class in our Black Money sequence. Blackmoney103.com really talks about the specifics of building a business, running a business, marketing your business. Attorney Nicole Compton has some really great lectures in there on literally all the steps you need to kind of get the business established from a administrative structural standpoint. And then a lot of the content that I created was based on kind of how do you get that business to the next level? How do you make that business make money? How do you figure out the holes in the business? And I really am a big believer and a big advocate. And even if you don't do that program, I mean, I'm an advocate of getting training so you don't try to figure out how to solve the world's problems by yourself. The answer is out there. Like whatever your financial problem is, somebody out there has the answer. Whatever any problem you have, really health problem, somebody has the answer. Relationship problem, somebody has the answer. And the question is, are you a person that looks outward for your answers, or do you just look inward? Because if you just look inward, that's beneficial because you can find your own path. The downside of that, though, is that you're limited in your knowledge base. So I would encourage you, and also you don't know your blind spots. You don't know what your biases are that are causing you to miss your limitations. And that's something I even grapple with because I do know a lot of things, but then there are times where I'm like, God, Boyce, you don't know the answer. Not because you haven't been exposed to the information, but because you literally have habits that are going to cause you to be biased in the direction of being the person that you are. Almost like gravity. Like gravity of a planet pulls you to the surface of that planet. So to escape that gravity, you have to have a lot of velocity. Like you really got to really be determined to get out of that planet's gravitational pull. The rocket has to have a lot, strong thrusters and engines to get out. So a lot of our lives have gravity. We're stuck on a planet. I'm stuck on the planet of me, right? And on that planet, every time I try to change, if I'm not determined to change, then I won't change. I'm going to get smacked right back down to the surface. So I encourage you, if you really want to shift something, or you really want to grow, or you want to elevate your life, or whatever, the best way to do that, I believe, is to go really sit and intensely listen and learn from somebody who thinks about things completely different from you, who's been able to achieve something that you can't achieve. That's going to open your mind to all the other possibilities that are out there. Let's see here. Do you have to pay short-term capital gains on income you make from stock options? Terrell says, yes. When you have realized gains and realized losses, you sell your assets. Yes, you have to pay. But I'm not a tax expert. I'm not an accountant. So talk to your accountant, talk to your tax specialist to make sure you do that right. Let's see here. Disney shares have gone up. Should I pull my profits out? Asked James. I didn't. I left it in there. But you can protect your profits, right? Like you can use things like stock options to protect yourself against the downside or give yourself a little more of the upside, things like that. So feel free to take a look at our stock options masterclass, so stockoptionsmasterclass.com. I kind of break all that down. Samuel, I'm at work. I was in a rush when I asked the question. Oh, okay, that's okay, Samuel. Don't worry about it. Danette, do you have a special financial class for baby boomers, or do you believe it's too late for them? No, it's never too late. And we don't have anything in particular for baby boomers in the sense that we don't treat them like any sort of group that's different from everyone else. I think that a lot of your goals are kind of the same. It kind of depends on what you want to do, right? So the Black Wealth Bootcamp is fun because it's kind of it's broad, right? It's all based on sort of understanding financial security and how that works. Another thing you can look at actually that's totally free is if you go to blackfinancialsecurity.com, there's a lecture there on what financial security even looks like. A lot of us don't even know what it means to be financially secure, how to obtain it, stuff like that. So blackfinancialsecurity.com, there's a lecture I put there. It's free to the students, and it's about maybe about 80, 90 minutes. And it does a breakdown of what financial security looks like, what you should look for in order to be financially protected. So feel free to go to blackfinancialsecurity.com. Okay, a couple more questions, and I got to get out of here. Let's see, Danette, what are your thoughts about taking out a loan against equity in your house to invest in the stock market, business, or another investment? If you do so, do it very carefully. I'm not one to say that that's always a bad idea. Sometimes it's a good idea, but you got to be really careful when you do it. Make sure you're still well diversified and you don't put all your eggs in one basket. I think that's really important. Danette, Danette asked 3 questions in a row. I shouldn't ask. So I'm gonna answer Danette's question and then I'm gonna answer one more. Is the Black Wealth Bootcamp training for people with no financial literacy? I think it's a good one size fits all thing, honestly, because even if you have financial literacy already, I like to think that that because I think of things a little bit differently, I can rehash something that you might feel like you understand and present it in a way that lets you see it from a different perspective, right? I think that's my superpower. My superpower is that because I've thought about these things intensely for 30 something years, it's like I just can see it from angles that you may not have ever thought about, or connected to things that you thought there was no connection. And that's something I enjoy doing because it makes financial stuff interesting and fun for me, but it also makes it relevant for you, right? To understand why financial literacy is probably the most important thing you'll ever have, and why investing relates to life. Like, you're always making an investment. You just may not know it. So the Black Wealth Bootcamp is good. So feel free to go to blackwealthbootcamp.com if you want to take a look. Caprentis says, can you explain a little bit more about what the airdrop is for those of us with XRP? Yeah, these airdrops, I'm not a crypto expert, but and I'm going to get some crypto experts in so we can have more detailed conversations. But it's real interesting. It's like they'll create this new currency, and that's like a spinoff of the previous currency. And then they'll say, okay, everybody who owns, this currency gets airdropped free units of this new currency. And so a lot of times the original currency's value will go up before the airdrop. It's almost like a dividend kind of thing. It's a little bit like a dividend for a stock, where if you own the stock, you get a payment because you're a shareholder. And then when the stock goes what they call ex dividend, like the dividend doesn't apply anymore, then the stock price tends to dip a little bit by the amount of the dividend. So the best way I can describe an airdrop at this point, and I have to really kind of think about it a little bit more because I'm not a crypto expert, is an airdrop seems to me to be a lot like getting a dividend. Like, okay, because you're an owner of the stock, you're going to receive, this extra benefit, almost like rewards points or something, because you're an owner. And XRP took a dip after the airdrop was over. And I noticed that because I'm an XRP owner. So I have to go dig into my XRP and find out more. I bought a bunch of crypto and I just own it. I don't really, study it every single day. I just kind of sit on it and see what happens. Crypto for me is a long-term investment. I'm thinking 5-10 year horizons on this because I think I know blockchain is going to be around. The question is, how is the crypto market going to evolve between now and then? Nobody knows. I do believe that there's a lot to be said about, when people say Bitcoin could rise as high as $100,000 or 200,000, 300,000. I believe that. I really do. And I think buying it below 20,000 really is an opportunity. That's my belief. That's not investment advice. It's just what I see based on what I've observed. Okay, so anyway, I'm gonna get out of here, guys. One reminder is, if you want your kids to learn more about economics and you want to have something maybe that's a good Christmas gift, we have financial flashcards and workbooks. So if you want to take a look, feel free to go to financialworkbooks.com. That's financialworkbooks.com. I hope this Q&A was helpful to you. I enjoyed talking to you, and I guess I'll see you in class. So take care, guys, and have a good day. I'll see you later. Bye-bye.